Over the long term, I believe that it's vital that every dividend investor should have a basket of growth companies in their portfolio. So today I picked out 5 companies that rather pay no dividend or a smaller dividend and have high growth potential and strong business fundamentals for the future. These are all companies that I believe will be big parts of the 21st century. With all that out of the way, make sure to join the Discord link in the description so you can see the stocks that I'm buying right now. And of course, my name's Ryan. I'm 16 years old. I do dividend growth investing for a long term. It would mean the world to me if you could subscribe. I'm trying to grow this channel as fast as possible, and I love seeing it grow so far. Also, at the end of the video, let me know in the comments which of these stocks that you own or plan to own. With that out of the way, smash the like button, subscribe as I mentioned, join the Discord, and of course, roll the intro.
Hello, I like money.
The first stock that I picked out is Disney, stock ticker DIS. Disney recently reported really positive earnings and the stock has been up 10% since then. Disney owns many of the strongest and biggest brands in the world under Marvel, Star Wars, and of course their Disney lines. They also have a very strong streaming and parks business right now. The Disney streaming business is set to become profitable in 2024, which is when I think that the dividend is going to be reinstated. As I mentioned, Disney suspended their dividend when C-19 happened due to park closures. Also, their free cash flow has taken a hit because they're reinvesting so much money in their streaming businesses right now. But I'm thinking they're going to reinstate the dividend in 2024. Currently, Disney's trading at a forward PE ratio of 30.48, and one share of Disney is currently trading at $121.17. Over the last 1 year, Disney stock is down over 32%, and that's even with the stock being up 10% in the last couple days. Disney's gotten caught up in some political drama with the Don't Say Gay bill, so it'll be very interesting to see how CEO Bob Chapek will continue handling it. Personally, I'd like to see Disney stay out of politics and just making quality content. Over the long term, I believe that Disney will be a free cash flow giant and will continue to pay a dividend over the long term. Disney will be making a ton of money by their parks business and streaming business in the future. Not to mention, they also have a bunch of new Marvel films coming out in 2025, which could be cash giants. So over the long term, I think Disney will be a great growth stock to own. The next stock I chose was Google, stock ticker GOOG. I think that Google has the largest content platform on the earth, which is YouTube. And I think that everybody in the world has used Google at least once. They also have massive data that they can use to expand their business. Not to mention, they also generate large amounts of free cash flow. With all this free cash flow, I'm wondering if Google will make any acquisitions of companies. Currently, Google is trading at $122.62. They're trading at a PE ratio of 22.87. Personally, I think that's undervalued for how strong of a company that Google really is. Google is down 11.4% over the last 1 year, and I think in the future with the massive amounts of free cash flow that Google's generating, a dividend could be potentially possible. Honestly, I might look to buy some Google stock myself. But if you want to see if I'm doing that, you're going to have to join the Discord link in the description or wait for my monthly portfolio updates. The next stock that I chose is Amazon, stock ticker AMZN. Amazon has again one of the most giant brands in the world. They recently reported really good earnings as well. They have had some execution issues recently with overhiring, but over the long term, I think Amazon will be a huge player in the 21st century. Currently, Amazon's trading at $143.49. Their 52-week low was $101.26, and their 52-week high was $168.11. Amazon also recently just did a stock split. Amazon's currently trading at a PE ratio of 71. So obviously, you're going to be paying a premium for this company, but I think that there's a ton of growth potential. The next company that I chose is Apple, stock ticker AAPL. Apple is one of the largest companies in the world and has one of the largest brands in the world. I'm willing to bet a lot of money that you're using an Apple product to watch this video right now, whether it be AirPods, a Mac, a phone, etc. Apple is one of the most used products and I think is considered essential at this point by consumers, which is why I think they'll actually hold up well during a recession. Over the last 1 year, Apple is up 15.5%. Their 52-week low was $129, and their 52-week high was $182.94. Warren Buffett was buying the stock near the 150s, 140s, so it's very obvious that he's very bullish on this company over the long term. They're currently trading at a PE ratio of 27.61. Honestly, for Apple, guys, I think that's actually pretty fair. Apple is currently my largest holding by market value. And Apple actually does pay a dividend, guys. Although a tiny one, Apple does pay a dividend of 92 cents per year. Obviously, Apple is still kind of in reinvestment mode as they only are paying 14.7% of their profits as a dividend, and their yield is currently 0.55%. To be fair, though, they are growing this dividend at a decent rate at 8.45%, but I don't think you can go wrong buying Apple stock whatsoever. And I mentioned Warren Buffett earlier, and this fifth stock is going to be Warren Buffett's company, Berkshire Hathaway. Now, guys, Berkshire Hathaway is a holding company and is in the business of buying businesses. Buffett currently does not pay a dividend in Berkshire Hathaway because he thinks he can reinvest the money elsewhere to make more money and more returns for the shareholder. Currently, for one share of Berkshire Hathaway, you'd be paying $301.57, so it's interesting to see if they'd ever do a stock split to make the shares more accessible for people without fractional trading. Unfortunately, I don't have access to fractional trading, but I would be buying right now. Berkshire Hathaway is currently trading at a P/E ratio of 20.55, so I think that's a very fair value again. But you want to see when they're buying back shares, so that will kind of give you a gist of whether they think their shares are undervalued or not. Now, here's a clip from Warren Buffett on why he doesn't pay a dividend.
I've never heard so many people ask, why isn't Berkshire paying a dividend? This at a time when the largest percentage of S&P 500 companies are now paying dividends, first time in a long time that they are. And then you have the fact that you own dividend-paying stocks like Coca-Cola, American Express, Intel, which just raised its dividend this morning, by the way. Why won't you pay a dividend to your shareholders?
Well, we think our shareholders 5 years from now will be wealthier, counting what they would get from the reinvestment of the dividend. We think they'll be wealthier if we hold on to the money. Now, we may be wrong in that, but historically we've been right. And if we'd paid a dividend over the years, our shareholders would be considerably poorer than they are. As long as we think we will have the opportunity to invest dollars to create more than $1 of present value, we'll retain the money, and when we don't think we can do that, we'll either repurchase stock or pay dividends.
Guys, that's the end of the 5 stocks. Let me know in the comments section, what do you think of these stocks? Are you buying them? Do you own any? I'd love to hear what you own. Me personally, I'll look to buy some of these stocks. You guys know which ones I do and don't own. I find myself guilty of not buying some of these stocks sometimes because they don't pay a dividend. But it's all good. Over the long term, I will definitely be buying into some of these positions. With all that out of the way, make sure to subscribe, turn on post notifications, join the Discord link in the description, smash the like button, and of course, do dividend stocks, not drugs. Have a good one.